do you think that there's either just stability in interest rates or a decline? Do you think there's any possibility for them to increase it? And if so, what do you think you'd have to see in order for that to happen?
All right, let's go. Do we get to the speculation part?
Oh, this is pure speculation right now. What's speculation, Charlie? He's my favorite guy.
Well, I'm going to check the date. I called this on social media, and I put it on social media because I wanted to make sure I had a record of this. And I'm just scrolling through now. Give me a second here. Should have prepared this earlier.
No, don't you worry. I'm throwing them. I'll throw the curveballs at you. I'll just keep talking and just keep filling in some dead air space for you. And I might even sing. Na 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 na.
Thank you for the covering.
You're welcome. You got it yet?
No, I don't.
You can just tell us what it was. I'm pretty sure I gave
in March, I called we're done with, it's on you can check my Facebook page. I haven't pulled it down, but it's in March. I knew that, well, in my opinion, I should say, and my view, now that some significant things have started to break, inflation has started to cool, I said that they're going to pause. And my view here is they're done. Now, there's only one thing that could stop that, and that is if this pause leads to a massive rally in the markets and property prices and they raise it again just to kill sentiment. But my, what do they call it? Base case. I think we're done from here, and I think they hold this position till late Q3, and then we get one cut this year, is my view. Now, my other base case, I will say, if that doesn't happen, one raise in this quarter, so Q2, just to make sure that they give everyone it's like they've given everyone, it's like, all right, I'm going to stop raising rates, but behave, economy, behave. Don't go out there and get crazy with spending. And then we all get out there and get crazy with spending. They go, what did I say?
Get back in line. I told you where to stand.
It's like one of those that comes through. And then I think it comes through as well. I don't think the economy can take much more, is my view from here.
Dude, did you see Deloitte came out and said that exact same thing? They actually reckon that they've gone 50 basis points too far. And they actually said that now they didn't realize the impact that it would have had. And they said that they should have basically stopped at the start of the year. And they had all this data that kind of supports it and backs it up. So it's interesting because I kind of concur with what you said. So previously I said 2 more rate rises between now and the end of the financial year, which is the end of June. You can bring in July if we really want because they meet on the first Tuesday of the month. I'm of the firm belief that I think there might either be nothing or one left. And it's really based upon inflation print, which I don't think is going to be higher. I think it's going to be lesser. And I actually believe it's going to be lesser by about 1%. Like, I actually think it's going to be significantly less. And what the government does in the budget, because I also believe that you're going to see quite a bit of stimulus come out, especially in the property space, from the government for the budget next year. And depending on what that says, I actually think that the RBA will try and take a stab at it to expect on what the second order consequence is going to be of that budget. And I just don't know what they're going to print into it. But I suspect that there might be something in there that the RBA will go, we just might need to push one more in here before we stabilise.
All right. So I think the question is, what does this mean for the property market is the next layer to that. Now, before we get into that, because I know we both have a view on this, I'm going to quickly run over something that I think is really interesting on this. The CoreLogic report has come out at this time. Now, you got to remember this rate pause has only just happened.
Yep.
And yet we're already looking that prices are up nationally.
Totally.
0.6%. And the one that is or the two, I should say, that are most impressive in my mind, Sydney was up 1.49% for the month. Melbourne was up 0.6%. I'll give a next favourite in here. Perth was up 0.5%. And then Brisbane kind of neutral. Adelaide, I'm going to say neutral as well, negative 0.1%. Hobart down 0.9%. Darwin down 0.4%. And then Canberra down 0.5%. Wouldn't you expect where we're at that the price decline would be kind of keep going from here based on everything that's going on right now? Don't you think it's fascinating that prices have started to rise again in the property market?
Well, especially in those desirable places to live, like your Melbournes and your Sydneys. I'm not too surprised because they did take a bit of a beating. And we know because the higher property prices, when they take a beating, it's a large dollar figure. And so they're usually the ones that are quickest to rebound back. Because all you need to do is just change the sentiment in the market and the mums and pops to say, ooh, this is maybe where it's going to land. Now I can just reevaluate my spending. Maybe I decrease how many times I go out for food and what I spend other money on, etc. And then they just justify it. You've also got this rental challenge, which we'll talk about in a minute, coming in, where people don't want to try and rent or try to find a place to rent in these desirable suburbs. Like, nah, that's it. I'm just going to buy it now that I actually understand a little bit of where I'm at. So I think it's more that the belief of most people in those areas is, great, this is roughly where it's going to sit for interest rates. How do I re-budget? How do I re-afford this? Yep, I'm happy to go again and getting back in.
I'm going to say something different.
Go for it.
I think this is the point where interest rates and property prices have detached in correlation.
Fair.
Go
a bit deeper for me.
All right. So I looked at this and, many people will say that there's a direct correlation between movements in interest rate rises and what's happened in property prices. And you'd have to say the rate rises have absolutely had an effect on the market. But I feel like we've just engaged in a force more powerful than rate rises, which is supply and demand.
Fair.
I think the mass bringing of people into the country has now hit the point where it's making a significant difference. And this will feed into something we talk about later with this rental crisis, where when you really think about someone who is renting and you look at all these people coming in, it's getting harder and harder to get a rental. The value of being a homeowner has just gone up. The security of being a homeowner versus being a tenant, with the unknown of if you'll be able to get another place, what your rent will go up. I think we've just added a different pressure on demand.
The certainty layer.
Yeah, I think that many people out there are willing now to pay a premium to be an owner because being a renter has actually gotten dramatically worse.
Yep.
And when you look at that, you go, well, if you're sitting there and you're thinking of your family's security and mental well-being and you're really worried about that, do you think you're really watching interest rates?
No, that is fair, especially with the rate of rental costs in Melbourne and Sydney going up the way that they're going up and the uncertainty that sits there, especially when the RBA comes out and says, oh, they're going up even worse and there's not much stock available. The only great option you got is to go and buy something, especially when it's on parity to your mortgage, to your rent costs. All right, fellow property investor, if you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.